All right. Here we go. Good morning, crypto junkies. Jay coming at ya. Let me get this off the screen. Come on. Coming at you with a little stream action. Let me just post this in the Discord and we'll get started. All right, yellow. Why is the stream health yellow? All right. Yeah, let's get it going. We've seen a breakdown in price in Bitcoin, and gold, silver are pretty much doing the same shit. Pretty sleepy, pretty boring. But so here's the deal. Here's what's interesting / possibly concerning is we have no new FUD today in this last 24-hour period. So are we talking about a massive delay from the Bancor hack news and a China official saying that, hey, blockchain technology is great, but don't mythologize it. Don't make it into this mystical thing that's going to save the world. And they essentially went on to say, hey, decentralization is nothing new. Before centralized banks, decentralization is how commerce was done. I guess I just don't really understand that part of it to a degree. Is either there's a delay in that or there's a delay in price suppression. So there's a few working theories going around, and one of them, some of the people that kind of tout this, I don't really like their approach that they take. It's like Alex Jones. The guy probably has a ton of great points, but the way he goes about saying this shit and he's just yelling at you on camera the whole time, nobody can listen to that guy for like over 30 minutes without feeling emotionally drained. So guys who are running around screaming from the rooftops that there's suppression and manipulation going on in Bitcoin and it's this tragic thing, I can't really hear those people for very long because, and I'm sure you would agree, because it just like wears on you, and it's just annoying the approach that they take, right? So are we seeing like a delay in the suppression mechanism, let's call it, or did it really take like almost a full day for the banker news to get out? The banker exchange got hacked for 10 mil, and then they blocked the other 10 mil of BNT coins. So 10 mil of ETH they got away with, and then another million of something else. So did it really take like a day for that to go out and like ripple through the ethos and then price action drop? Or is there like just this delay in the manipulation piece that then caught up, right? I don't know. So we're looking at the hourly, but it's easier to see on a higher time frame. We basically 100% retraced, right? So you see this action here? This is when we broke out, and remember we were celebrating back a couple days ago. Yay, we finally broke above this descending wedge or zone here, this descending wedge. We broke above it, and then we were good for like 10 days. We were trending good for like 10 days. We were doing good. And then we essentially 100% retraced it, and now we're back down here. So the thing that's interesting is that volume is really low in the on BTC, and the market cap is still really low. So when that happens, it's like every little thing matters, right? But overall, look at the crypto market. Like you bring up a good point, Lambo Crypto, is that crypto itself is not popular right now. Now there's people again taking this to dramatics. Like some people, you notice they comment all over Twitter, and their comment is very much the same thing. And what they're saying is, the exchanges, nobody's even trading. The exchanges are just market maker bots, and nobody's actually trading, and there's no volume at all in crypto. Everyone's run away because crypto is, fill in the blank. And they use this as like a reason that crypto is dead. Like, time out, man. You know what I mean? You got to kind of throttle back on the emotions a little bit, because most markets are driven by retail money. Well, retail money is not in crypto right now. Let's be honest, okay? Retail money is not in crypto at all right now. They've all run out. So what you have left is the fundamentalists, the maximalists, you have left the people that are true believers, the holders, the believers in the technology, so on and so forth, or people that are so deeply bagged up that they can't move. But that doesn't mean crypto's dead. Like, that would be like trying to say that the stock market, drops 30 points and it's dead and nobody's trading and it's, it's all market maker bots on the exchanges. Yeah, it's like, chill out with the theatrics, the crypto market as a whole is still relatively new, but the adoption you can't deny. Like, it's talked about daily on Bloomberg, constant articles on top mainstream media. It's not going anywhere. I really don't understand the line of thought that from very slim amount of people, but they're very loud. Bitcoin's dead. It's going down to zero. Like, it's just not. It's just not going to happen. So yeah, we just essentially seen a 100% retrace. My new working theory is that we're going to see a pump again around the holidays. We're seeing very similar, and take note, like today, right now, we are still 170% up from last year at the same time, okay? But I don't think we're going to pump until the end of the year again, like last year. And so that brings up another point that I want to touch on is, myself and several others, like 33K by July, that dude on crypto Twitter, and many, many others, we're all predicting that we would have already seen 30 and 40K. We were all talking about this back in November, December, even in January. I think some of us were still pretty optimistic, but I guess my point is that it's not that we were wrong. Maybe there's variables that none of us really know about just yet. I will say that there is definitely some very interesting breadcrumbs lately. China represents now 1% of Bitcoin. The Chinese population owns 1% of Bitcoin. I actually think it's more. I think they're downplaying that number a little bit. But China is a huge player in this market. So even if we look at the price action in the last, this last 24 hours, and I saw this happening yesterday as we saw the decline in price, maybe the Chinese, is that big of the market that when that news hit of a top Chinese banking official saying, hey, blockchain is great, but just chill out about it, maybe that did affect the price action that strongly because of the sheer amount of volume that China does. Or it could just be that China volume is high, but the rest of the world is low right now. So we have to look beyond some of the speculative things and start to form some working theories, okay? And one of the working theories that I definitely agree with, I just don't know to the depth or degree, is that suppression is happening, right? Suppression definitely is happening in crypto. And here's why, right? So you got to understand what crypto is up against. Crypto is up against central banks. Do you realize the depth that central banks go to and through every day to make it look like fiat currency is the best option? There is blatant proof that for the last 25 years, gold and silver has been manipulated and suppressed, right? Gold and silver prices don't make sense. Even right now, they don't make sense. Okay, let's just look at a few stats to help back up my point. Right now, the US is $21 trillion in debt. Okay, that's 1, 2, 3, 4 comma places. $21 trillion in debt. That's a real fucking number. Okay, the global debt is estimated at $237 trillion. So the big banks, the Bank of Japan, the People's Republic Bank of China, the Fed, all the top banks in most countries, those are the big players. Those are the big centralized players. And what they essentially do is they buy up their own bonds to attempt to pump up and keep the price stability high of the US dollar and the Japanese yen, whatever the fuck it is, and the Chinese yen, right? So they're constantly doing that. It's estimated that they're floating between $4 and $6 trillion every single day in buying their own garbage ass bonds to keep the price high, to keep the dollar looking strong. Okay, so yeah, I don't think any of this is groundbreaking either. I don't think any of this is like revolutionary to where it's like, wow, I didn't know that. So the federal system is at risk right now. And so there's a few working theories as to what's going to happen with crypto as well. And one of them is that the U.S. or the CIA or somebody actually created crypto. And in the second line of thought that's really popular is that they're going to use crypto as an excuse. Like crypto's gotten so big, it's forced us to get rid of fiat, and we're going to all jump into crypto now. Which I actually like that a lot, honestly. And I think that's one of the smarter plays to make, because there's really they're running out of string and rope to hang themselves with, and washing debt and attempting to hide debt and hide hyperinflation, which is very, very true and happening right now in America. You can track this very simply by looking at like the price of bread over the last 3 years, the price of gas over the last 3 years, the price of your cost of living over the last 3 years. Your dollar's getting less and less, right? So, not to rant too much on global politics and global economics, but it really does come into play with something like little old Bitcoin. So look at the to drop a few more breadcrumbs, look at the theme. You have centralized bankers all over the world. We've seen this now. European bankers coming out, Chinese bankers coming out. And what are they all saying? It's almost as if they're all reading off the same cue card. Yes, blockchain technology represents something new and exciting that will change the world, but slow down with Bitcoin. Chill out with Bitcoin, right? You can't just make a new currency, the head of the BIS said, right? Which that guy is extremely huge, by the way. I don't know if that's stress or what, but he looks very unhealthy. So, you can't just make a new currency. You can't just print money, but it's what they do. So there's this huge double standard that occurs, but it's in their best interest to suppress the price. We can all agree on that, right? So I don't know. You know what I mean? I don't know if the reality is that it could be both things happening, or one of the things happening. So are they just is there suppression going on at the highest level, and they're just trying to wash it and blend it in with some of the technical analysis that does work, right? Like on Bitcoin, I don't think Elliott Wave works that well, but a lot of the other patterns do match up and mirror up. Are we just looking at mass psychology and groupthink happening? And it's happening based off of the news in a weak market cap, which again, that is a potential as well. And it makes sense. The market cap's below 300 billion. I told you the tipping point really seems to be in a big leverage point for crypto market, really seems to be 300 billion. Is that what's happening here? Is we just have groupthink and overall psychology of the masses that are either not trading, not moving around their crypto, and this is just, we're seeing like the little bit of speculative money that's left in Bitcoin, with the price action affecting it. There's a few different ways that we can really look at this, but overall I'd say that think longer term with Bitcoin. Think longer term. Like even if we look right now on a 4 hour, look how oversold we are. Right, and I told you before, I really look at RSI oversold as a key indicator, especially if you're just looking to accumulate. It's a key indicator to accumulate. Look at this, here. So on a daily, I use it on a daily, especially for gold and silver. That's when I accumulate all gold and silvers, when it's in the oversold territory. But anyways, we got some distance and gap between. Let's look at some more indication here. We got some distance and gap between the signal and the MACD, and it looks like. It'll be interesting to see what forms next, because it looks like we're getting ready for a reversal. These are closing in together. And also, too, when you see these big swoops between the MACD and signal line, usually what happens when it dips, it'll dip really, really low. And those big gaping swoops usually lead to big bull price action on this, okay? But on the 4 hour, this green goofy looking line is the 200 EMA. We broke through that. We broke back through this trend line that was established way back in May. So we're not looking good. It's the same scenario that we were looking at back here and back here. Nothing's really changed. Now we've got an even bigger fight in front of us in terms of price action and ground we need to cover. So these red lines here, we need to break through these and close above these on the daily for us to get back to where we were at. But it makes sense what just happened. We spent so much time testing this price line, testing. But while having low volume and having a low market cap, it makes total sense that this was going to break down, right? It makes total sense that this was going to break down. I didn't see it breaking down below this bottom support line, which was really supporting this whole channel over the last 10-ish days, but it did. So now we actually broke through that to 100% retrace. So if we look at this here, oops, okay, let's try that again. Let's zoom in and try that again. Yeah, I was not expecting 100% retrace on this at all. Yeah, we broke through the 236, but now we're actually getting some 236 testing now, right? But yeah, we touched down on the 100% retrace zone here, right? And so now we gotta test the 236. You know, there's other support lines that I've got, these significant lines. They all matter. So it's just a bigger battle now in front of us. With volume will be lower. You know, sentiment is going to be lower now. So it's going to take a lot of good FUD to get things back in the hands of the bulls. Look at our daily. Yeah, so on our daily, we just pierced right back through this line that was formed back in May, which is just bad. That's not good at all. So support-wise, this is another support zone that we can expect if it breaks down further below the 100% retracement, which it would be hard for it to do that. Understand, even with, you know, let's call it FUD, low market cap, it would be hard for it to do that. But let's say it does, this is another line of support that we can look at, okay? We see MACD here. We see lower highs, okay, happening. And it's looking like it's getting ready to cross. So that's all bullish sentimentation, right? RSI isn't really telling us much. We don't have any divergences or anything happening. Kind of sleepy. And then Stash RSI coming back down from overbought territory. Okay, so let me look at some of the comments. The comments section is going nuts. Yeah, quantitative easing, to kind of go back and talk about, quantitative easing is really just a technical term slapped on the fact that they're robbing Peter to pay Paul. They're trying to wash out debt. They're buying their own bonds to hide the actual true numbers. And that will only last for so long, right? And I don't think the US dollar was supposed to last this long. The average fiat currency lasts what, like, I think it's 28 years. And we've had this one for like 78. Right, I might be muddying up those numbers, so don't quote me on that. It's been like 3 weeks since I looked at those numbers, and sometimes shit blends in my mind. So if I'm wrong, I apologize. But yeah, the fact is that the U.S. dollar has been around for much longer than it should have, especially while being uncoupled, let's call it, from the gold reserve. Gold reserve was removed in 1971, so the gold-backed dollar was removed in 1971, right? I think things really started to get worse with Bernanke, right? When in 2007 and 2008 bubble hit, which, believe it or not, that whole thing started in 2006. People started seeing it in 2006, but it didn't actually occur or roll out, and the masses didn't actually agree with it until 2008. Yeah, okay, we got a problem. But there's bubbles like that now. Not the housing crisis and the housing bubble that exists now. College debt's a big one. So the college debt crisis, let's call it, is a big one that's happening right now, right underneath our feet, okay? So, yeah, I mean, and that's, if anything, that should really further back up why you should diversify. The days of putting your money in a bank are over with, and I think they have been for a long time, but let this sit in for a second. Most banks in America will charge you a monthly fee if you don't keep a certain amount of money, a certain balance in that account. So essentially, simplifying it down, you have to pay to keep your money in fiat in that particular bank to get what we've all been convinced as the benefits of having that bank account. So yeah, you got to pay bills and stuff like that, but again, with crypto, it's opened this all up. We have Revolut in Europe. We have SpectroCoin in the UK and Europe. We have BitPay cards in the US where you can literally now pay things with crypto. The fees aren't always good, and BitPay is obnoxious with the fees that they charge, and they try and mask it as mining fees, which is bullshit. So I'm not saying it's perfect and hunky-dory, but you know, you're getting charged everywhere you look anyways. And to get charged to keep your money in fiat is just like insanity to me. Whereas you could keep that in physical gold and silver, or, you know, you could keep it in crypto or something else, right? So I think it's just important, if you haven't already, to be diversifying. And if you're a day trader, if you're a speculator, you're getting caught up definitely in the price action of Bitcoin. But if you can just open your eyes a little bit to holding that for a longer period of time, especially the next couple of years, I definitely think it's worth holding. Beyond that, I'm not so sure. And what we're going to have to look at is what the centralized banks try and push out, because believe it or not, or like it or not, they are a big player in this landscape, and they have a huge balance sheet, and they have huge impact and huge leverage. So they will do something in the crypto space if they haven't already. And so what we're going to find out over the next 12 to 24 months is, are they already in the space and we just all figured out, Ripple, maybe, or are they going to come in with something, a Fed coin or some other national current, quote unquote, decentralized blockchain-based currency, right? Don't know. So time will tell. So those are the things that I look at, right? So I don't know if that helps you or not. I just sometimes like to talk through these things, and maybe it strikes something in you guys, and maybe it helps you guys with your investment strategy. If so, job well done on my part. So yeah, that's what's going on with Bitcoin. The verdict is out. To summarize, is this manipulation going on, or is it just coincidence with the timing of the Bancor hack coming out and that spreading around, Chinese officials talking shit? Is it that, right? Don't know. But I will say, if you haven't already started looking at macroeconomics, you need to, because those are fundamentals that affect the crypto market. See, most people, like in the stock market, I think it's easier because you can look at balance sheets and profit and loss, and you can look at who runs the company, and they're putting out quarterly and annual reports, and all those things exist in a normal company, which I think makes the stock market much more predictable for those who care to research, right? Look at Warren Buffett, prime example. He likes slow companies. He likes old companies. He likes shit that is fundamentally really not going anywhere. He was late to the tech bubble, extremely late. He'll be late to the crypto bubble, or market, whatever you want to call it. I don't say bubble, meaning it's a bad thing by any means. And if you want to talk bubble for a second, the $20,000 run that we saw last year was the pre-bubble to the fucking ginormous bubble that's about to occur. So there is a scenario too that we need to all pay attention to, which is the following. And I know I'm ranting a little bit. I hope you guys don't mind. Is there is a hyperinflation scenario that could occur in America, just like what's happening in Venezuela. 41,000% hyperinflation in Venezuela, by the way. Takes you a garbage bag of money to equate to about $25 to $50 US. That's obnoxious. That is ridiculous. Zimbabwe, same thing. You guys see that meme floating around crypto Twitter where the guy's holding up like $1 million or $1 billion bill, and the caption is something like a billionaire who can't even buy food, right? So there's a hyperinflation scenario where the debt gets out of control, and the centralized banking mechanisms can't control it anymore, which the bigger one, believe it or not, it's not the US that's in the most trouble, it's Japan, okay? China's pretty well managed because they've been hedging all of that against gold, okay? They've been putting in huge buy orders for gold. They're one of the top national producers of bullion. They're a top 3 producer. And they've been pulling out a shitload of their gold from the US Federal Reserve because they see the writing on the wall too. So there is a hyperinflation scenario that could occur. And in that scenario, there's 3 things that would go absolutely nuts. Bitcoin, not crypto, but Bitcoin we could guarantee would go nuts. And I assume the top 20 cryptos would all go nuts, honestly, because the Bitcoin network would be bogged down, and then people would need to move to the next one. So then they'd jump to ETH. That network would bog down. 350 million people in the US, okay? Do the math on that. 350 million people trying to send Bitcoin overnight, essentially. Buy and sell Bitcoin overnight. It'd be insane what would happen to the price action. Okay, so we could assume the top 5, top 10, top 20 would all go nuts. Gold would go nuts and silver would go nuts because the amount that they can buy and print with ETFs, JP Morgan does this, to try and suppress down gold and silver, they would not be able to manage that anymore because they'd be bleeding from too many areas. They'd have lines out the door to get their money, their fiat money, which that would hit critical mass really quick. Capital controls, maybe, that would start to happen in America. And then everyone would run to the thing that they've already been hearing about from their crazy nephew or their crazy cousin, which is crypto. So anyway, just, you know, don't think that that's out of the question, and prepare yourself. You know, get your ducks in a row. And yeah, for Matthew, thanks for chiming in the chat. Pot stocks, marijuana stocks, all the fundamentals of what is required to make marijuana grow is a huge opportunity right now. There's already been huge gains. Like we're talking somewhere between 30% to 300% on some of these stocks. Some are penny stocks, some are actually on the actual stock exchanges and things like that. But yeah, anyway, yeah, I mean, it's bleeding out when, but I don't know. Like, I think in crypto, it's kind of funny. So when the market goes bad, a lot of people go and they'll look up like Tone Vays and stuff. And then they'll be like, oh, I guess he was right. Yeah, it's going down to 3,000, or what does Tone say? 4,000? I don't know. I don't really watch his stuff. But, and then in a bull market, they'll go and look at somebody completely different. And they'll be like, yeah, I don't want to listen to Tone anymore. Screw that guy. He's saying it's going down to 4,000 still. So I'll go and listen to somebody else. Cognitive dissonance and confirmation bias is a hilarious thing, by the way. So all I would say is that if you like the price, it's time to buy. I think, you know, if we're comparing and playing hindsight trader, you know, better time to buy was back when we dipped into 58. But even if you played some longs, you'd be in good shape. Let's look at some long price ranges here. 18% on that last run. Right now. And you got to look too, back when we crossed through this line, I even mentioned it on that stream, back when we crossed and broke through this, you know, this descending channel here, there was a ton of shorts getting put in on the futures contract side of things. Tons of shorts getting put in, right? And so it looks like they won. Here we are days later, what, 5-6 days later, looks like they won. So those shorts that they were putting in maybe on this support line, they're already at 2%. So we might see a push down here. We might see lower. And so to riff on futures for a second is we're coming up on some expiration dates. This I've published in my trading view. There's a Steemit link underneath this video that will take you over to it. Yes, okay, it's still there. And you can check that out. But yeah, we are coming up on the 18th. Market on the 18th. Who's purple again? Is going to be CBOE expiration date, and then this blue line will be the CME expiration date. Especially this year, we have seen extreme price fluctuations happening around the expiration dates. So you can expect something to be happening around the expiration dates. And so it's part of that working theory, which is about price suppression. Well, the price suppression is coming from the futures markets, they're claiming. And this could be 100% true right now because the market cap is so low, right? So the overall volume happening in crypto right now is so low that, okay, we come in and we dump 1 million futures contracts saying that the price is going to go down. I mean, it does drive the price down. We go and then we leverage BitMEX and other margin accounts for some shorts, and all that ripples through the price action in a low market cap. Right? CBOE, yes. Kyle, I don't know if they got approved, but I know that they submitted for approval for Bitcoin ETFs. Again, a lot of people are saying, oh, this is a good thing, mass adoption, right? Institutional money is coming in. It's not. It's really not. It's insanely dangerous in a low market cap, especially because what that means is that they meaning the people that are buying the ETFs, the big whales buying ETFs and buying the futures contracts, they're driving the price. And again, depending on the overall size of the market, this number will change, but it seems that number right now is like 300 billion is like the leverage point, right? So yeah, ETFs, I don't see that as a good thing at all, honestly. So yeah, we're below all the major, on a daily and the bigger time frames, we're below all the moving averages. Okay, so let's jump into gold and silver. Gold is being supported on a 200 moving average, which is great, bounced up above that. Oh wait, no, that's gold-silver ratio, but gold is the same. So, no, it's not. Wait, what am I looking at? Oh, gold-silver ratio. Okay, so let's talk about this for a second. I had read something the other day that so far this year in 2018, when the ratio, meaning the amount of ounces of silver that it takes to buy an ounce of gold, when it's at 80, that gold usually tends to rally this year, but that's not necessarily true. I went back into the data and I couldn't confirm that at all. So anyways, on the gold to silver ratio, we're being supported on the 200 moving average. We're not on gold. I set these up yesterday, but I wanted to show them again today. Gold is really predictable, meaning that whatever suppression or manipulation is going on, it really follows algos. And what I mean by algos is Fibonacci sequence and Fibonacci retracements. So if we go back here to July of 2017, 1 year ago, and we follow this trend here, this price action, all the way through September, so 2-month run, and what do you know, from December all the way through to January, we're seeing full retracements happening, and a lot of price action hitting around key fib lines. So look at this. Here's what I mean. Bull run happens, comes back down, and it tests and starts to get choppy around the 50%, which always happens in bot trading and algo trading. Then we find full support on the 236. 236 is always, 382 and 236 are strong support lines for most markets, okay? So what do you know? It bounces super strong off the 236, and we get 100% bounce and matching, so a double top on this previous high, okay? Then we get some chop happening here in the 786 zone, and then we go all the way back down, and what do you know? We're supported once again on a 236, which this just happened. This was, I think, the very first day that I started doing these streams, okay? So now we're bounced off this 236, the previous 236, okay? This 236 line, not this one. So here's the 236 for this trend right here, all right? All I'm using is the trend-based fib extension. So now we bounced hard off the 236, right? Previous support, double bottom, and now we're bouncing back up. So now we're challenging in this trend zone, we're challenging that 236 line. Okay, so this is now acting as resistance. But we can expect that over the next couple months, what are we going to see? We're going to see this. We're going to see this. So the bullish case would be that we see this and we break through. We will 100% break through because double top this time. It's very likely that we'll stop and test once again here. Because look at all the testing at this line. You can tell that the price, this is insane. The price wants to break through this number so fucking bad, right? But it hasn't. So my guess and my assumption is that it will break through. All right, so what we'll most likely see is, well, I need a extension, not a trend extension. I need just a fib tool. But we'll go back up to the 236, so the plus 236 or even higher. So that's the prediction in terms of where it could go, which puts us well over 1400. Or the bearish case, which I do not see this happening because there's too much fundamentals happening. There's too much breakdown in fiat, which is strongly used as a mechanism to look at the value of gold and silver. The bearish scenario would be that now, okay, we've tested this too many times up here, and now this is a breakdown that's starting of a further breakdown. So for the bearish scenario to really play out, what would we have to see? We'd have to see another retesting of this 236 line, then we could expect it to break down. So if it does break down, first indicator is we'll see a retesting happening here. Then we'll see it further break down. I don't really see that happening. Okay. It really likes like this 236's support. And the crazy thing about gold and silver is you've got 25 years of fucking data to look at. But this line is so significant. It's like, holy cow, man. It's like concrete. So see it? See all this price action happening around that line? That line is what we just dipped down to, which is perfect accumulation time. So see, if you're just, excuse me, if you're just looking to accumulate gold and silver, then you just buy when it's oversold like this in that 20 to 30 zone. And since this is daily, it's like each day you see this, okay, buy some, buy some, buy some, right? I always start losing my voice about 30 minutes in. I got a little cold, so I apologize. Silver essentially it mimics, much like ETH mimics Bitcoin, silver mimics gold. So we see similar price action, still floating below the EMAs. But here's that big testing point. Hey, what do you know? Back here, all the way from December, that's the support line, that 236 support line. And there's channels that occur too. So we've got channels that happen on a diagonal in markets, and we've got channels that happen side to side horizontally. And so the channel that we're flowing through now, even though we broke a little bit below it, is this zone here, from this one to this one. So you could safely, like, look at all this. This is a whole year, almost a whole year of price action so far. The last 7 months of price action has been just floating in this channel, and specifically in this tighter channel here. So there's profits to be made from a day trading standpoint. You can just fib extension or fib retrace this and set your buys and sells and just walk away, go hang out at the beach, and you can make some profit off of this. All right. Same thing with gold. There's channels happening in gold. They're much bigger. You see, like if we were to go back, I would really primarily operate in this bigger channel that I've got the fib, the trend extensions done on, right? And based off the fib numbers, you put in your buys and your sells, and just create alerts, email alerts on TradingView, and walk away, man. You don't have to be in this all day, every day. Anyways, that's what I got for you guys today. Oh, quick heads up. If you're in a Discord community, which is now over 5,300 people strong, we got a Steemit hustle that we're going to start soon. Steemit is an actual coin that has utility. Hey, crazy, right? It's one of the few cryptocurrencies that actually has a use case and is out there being used. They've got a Twitter, I guess you could say a Twitter equivalent. They've got multiple YouTube equivalents, or if you want to say a YouTube and a Twitch equivalent, and all of this stuff, you can earn Steemit power and Steemit coins off of. The whole thing and how it works, I got to admit, is a little confusing. Steemit power, Steemit, the coin itself, how do you earn it, how this whole little ecosystem works. But I'll tell you what, it's growing. Even though the price of Steemit, like I just bought some yesterday, it's been floating below $1.40. I got some at $1.37 yesterday. And even though the price isn't super strong, and it's way low in comparison to all-time highs, that community, mark my words, the Steemit community is growing. So what we're going to arrange is like a little train, and all it really means is that everybody's going to be making Steemit dollars and Steemit power through the community efforts. That's all it means. So we're going to be making money. Some of these guys are making upwards of $1,000 a day that are doing it in other communities, and that are just doing that are hustling Steemit essentially. They're making a killing. So we're going to get in on this, especially in a down market. In a down market, you have to get creative. You have to get creative mixed with a little bit of logical thinking and understanding of mass psychology. So understanding what everybody else is going to go do. If you can understand the basics of what everybody else will behave and do and think and act, and you have some market history and some market data, you can make some simple little hustle plays, which I seem to be pretty good at. You can make some little hustles, and you can make 1.5, 2x your money, 4x your money, and nobody really knows it, right? So that is an alternate to sitting around reading charts, waiting for price action to come back to Bitcoin. There are so many other things that you could be doing. And also too, there's been some really good altcoin pumps in the last couple days too, right? There's been some good runs. So it's not like all is lost and we're all just waiting around. There's other shit you could be doing, right? You could be getting into masternode coins. A lot of those masternode coins are at all-time lows right now. We've got one that we do, which is another really active YouTube community. It's called Civitas. And that thing is seen $4. Right now it's at 40 cents. So talk about like a great time to accumulate and get a seat in a masternode pool or create your own masternode. So these little hustles, guys, are what's going to really, that mixed with, okay, I'm investing in some ICO stuff and that's not going to hit till later this year, mixed with I'm holding on to some Bitcoin, mixed with I'm holding gold and silver. You see, you sleep better at night when you got shit like this going on. So yeah, anyways, that's all I got. So if you want to get in on that or you like Steemit, you just want to join the community, we've got a ton of stuff going on in there. Join it, it's free. And that link is underneath the video. And then if you want to check out the futures contract expiration dates and go ahead and place a comment on that thread on TradingView, that link is underneath the video as well. Cool? All right, guys, thanks for jumping on with me today. We'll be back tomorrow to talk more price action. Thanks and see ya.